Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, Summit TV's real-time, real money trading show. As always, we're joined by Garth McKenzie, who is, of course, the editor and founder of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, let's start off with one of the shares that you've dipped into a number of times this year, Naspers. It certainly seems to have been a stock that has done very well for you.
It has done very well for us, and in fact, we've traded it, I think, 3 or 4 times this year, and I think we've made money out of those trades on all 4 of them. So it has been a great stock for us, and I guess you do develop a certain affinity to shares that do well for you historically. So I do like Naspers. I think why we've done well out of it is because it's been a very strong share this year, and we've always been on the long side of it and been positioned correctly. So naturally it has been quite a, I'm not going to say easy, because trading is never easy, but certainly the trend has been in our favour.
You seem to have caught going along at the right time.
Yep.
I think, and it's quite interesting how one sometimes has shares that you say you have an affinity for, that do well for you, whereas other shares maybe this year haven't been so good. I'm thinking of AngloGold Ashanti, for example. So just remind us why you went into the trade on Naspers and how it's worked out.
Yeah, okay. Well, what we had here, if you look, we had an upward trend going all the way back to December of last year, which you can see indicated there. We also had this overhead, what was overhead resistance, and that came in at around about 475 Rand over there. Now what we had in August, we saw the share actually break out through that overhead resistance area, and we had this nice controlled consolidation over here, which I said at the time looked to me like it was a bull flag type of pattern, and I'd ultimately expected to come back, retest that 475 Rand area, and ultimately then break out and continue with the uptrend. And that's exactly what happened. So what we did, we bought for our portfolio, we bought 380 CFDs at a price of 472 Rand, and I used a stop loss here at 458 Rand. So quite a loose stop loss, but I didn't want to run the risk of the stop loss being triggered unnecessarily, which is something that has also happened to us a couple of times this year as well. Anyway, it's worked out very well. During the time that we've been holding it, we also picked up a dividend of 3.35 Rand per share, or per CFD. So we collected that as well. And remember, all along I said that our target on this trade was 520 Rand, and it's got to that level. It's actually exceeded it today. But yesterday I looked at it 518. I thought to myself, you know, if you include the dividend, we've basically got to our target price and gone slightly beyond it. Let's rather bank the profit, not be greedy, and be done with this trade. So I've done that. We've made a nice healthy profit there, 16,853 Rand, including the cost and including the dividend. So I'm very happy with that. As I say, it has gone a little bit higher today, and I suppose it's a trait. We sometimes do sell too early, but then at the same time you also need to leave some on the table for the next guy sometimes.
How very magnanimous and generous of you, Garth. If you were a longer-term investor, would you still be in Naspers?
Definitely. I think it's great. I mean, there's making new highs on a consistent basis. There's a very well-defined upward trend there. And if we go into the fundamentals, I mean, the stock continues to grow its earnings in a very healthy way. So as a longer-term investor, yes, I would stick with it and hold tight. And I think it's still got legs for the longer term, absolutely.
Okay, well, moving on from Naspers to the sector that you identified as a potential area of interest for the portfolio and for other investors, or traders out there rather, the resources sector. And you talked about the breakouts that we've seen, and it seemed to be a little bit premature talking about sector rotation because these stocks have all come back. But do you think that's a positive move and possibly a signal to start nibbling?
Well, I think it is. What I want to show here is the charts of Anglo American and BHP Billiton. I did show these 2 weeks ago, and I'm going to basically go back and talk about the same thing, but have a look at what's happened subsequently. So if we look first of all at the chart of Anglo American, notice there that we had this downtrend which had been intact for the whole of 2012 to date, and each time the stock had rallied up to that line, it failed and it went lower, and you could see a consistent pattern of lower lows and lower highs there. Now what we had in September was a breakout. We broke up above that downtrend resistance line, and at the time I said, well, that's potentially bullish, and what we'd need to see is the stock maybe coming back and retesting this breakout area, and holding that support, and then if it makes a higher low, from here and starts to move up, then potentially we've got a confirmed trend reversal, and then maybe we can start looking to buy these resources shares, and this one in particular, which is Anglo American. So what you can see there is we have now had a pullback to that breakout level. That previous resistance line now should act as support on the retracement, and thus far it does appear that that has been the case. So I'm watching this carefully. I haven't done anything yet with it, but I'm certainly watching it very, very carefully. If I'm going to be trading this share, I'd like to try and buy it around the 250 Rand sort of area if I can, and then I'll set a stop loss on a move basically back underneath that downtrend, basically back underneath that that white line. If it went back below there, I'd look to then cut it. So we're going to watch this in the week ahead.
If it did go back, if it broke back below that, would that be quite a negative indicator?
Well, it could be, yeah, it could be, because then it would have meant that the whole breakout would have been a false break.
Yeah.
So it would be if that were to happen. But thus far, as it stands right now, I'm fairly encouraged by the action here. And I would be starting to look to nibble on Anglo American at these levels, because I do think that we've got potentially the makeup of a trend reversal happening here.
Is it just Anglo American, or are there other big resources stocks that you would also?
There are others as well. The other one I'm going to show here today is BHP Billiton, but there are others as well in our market that are also making these same trend breaks. So if we have a look at BHP Billiton, notice there we've got this downtrend which goes all the way back to the beginning of 2011. And again, we had a breakout there in September. We broke up above that downtrend. And again, I said, let's wait and see. If we get a retracement and a pullback and a test of that line, in other words, the previous resistance then becomes support on a pullback. If it holds, then we can say that we might start looking to nibble on these. And once again, we've actually had that in the last week or so. We've had a pullback all the way back down to about 255 Rand, which is the area that I was looking for it to pull back to. And so far, it does appear that the stock has held that support level, and it started to move up again off the support. So, but both of these, Anglos and Billiton, I'm quite encouraged by what I'm seeing here.
Just a cursory view, though, that BHP Billiton chart looks a lot healthier than Anglo American. So if you were going to take a punt on the resources sector, would you rather buy into BHP Billiton?
Yeah, I think you're right. BHP Billiton, what I like about it from a fundamental perspective is that it's got a far more diverse group of resources that make up its business. It's also much more geographically spread around the world, whereas Anglo still has a fair amount of South African exposure. So I think you're right. From the chart absolutely does look a bit more healthy in the case of BHP Billiton, and I think the fundamentals likewise are a bit more healthy. And the other thing to remember between the two stocks is that BHP Billiton has a progressive dividend policy, which is also always a nice underpin just to have. I mean, that's more an investor mindset, but it's something just to keep in the back of your mind, even if you're a trader as well.
Of course, although if your profits go to nothing, then progressive dividend policy is all very well. Garth, another thing that you highlighted a couple of weeks ago was a potential weakening in the Rand, and in fact, we have seen that, and it is this week's trade, so perhaps you'll talk us through that.
Yeah, this is this week's trade. I spoke about this chart last week on the show, and I said that we'd be watching this very carefully in the week ahead. So just to revisit it, basically what we've got here is you can see overall there we've got a slightly weakening trend for the Rand. As indicated by that arrow. This chart goes back about a year and a half, and you can see over that period we've got a slightly weakening trend for the Rand. What I also notice here is that over the last 4 months or so, the Rand has been consolidating into a triangle pattern. And these typically are continuation patterns within a trend. And 2/3 of the time they normally break out in the direction of the prevailing trend. So then in this case, it would give a far higher likelihood of a break at the top of that triangle, which would indicate a weakening of the Rand. Obviously, bear in mind there's also going to be 1 out of 3 times when it goes the other way. So we've got to keep that in the back of our mind, and that's why we have risk management policies in place with all the trades that we do. But for my money, I'd place a far higher probability on a break up, in other words, for the Rand to go weaker here. So we've also got this big overhead area at 8.55 Rand, and you can see that the currency has tested that level on many occasions over the last year or so, and hasn't really managed to break above it successfully. But I think what would it get you if we were to see a breakout through the top of that triangle and a break through that 8.55 Rand area? That could be quite significant, and it could mark a sort of a period or another leg weaker for the Rand and a period of Rand weakness. In terms of a target price, the way you achieve your target is you take the height of that triangle pattern at the broadest point, and then you project it out from where the breakout would happen. So we haven't seen a breakout yet. it would need to get above R8.40 to break the triangle, and then as I say, above R8.55 to clear that overhead resistance area. And if we got all of that, then I think it would open a target of about R9 for the rand-dollar exchange rate. So that's basically the trade that we're doing this week. And what I've done is I've shorted rands at a spot price of R8.25 over the past week. And last week, viewers will recall, I said if it gets down to R8.15 to R8.20, you can look to do the trade. And it got there very briefly. I was a little bit slow off the mark here. So I got in at R8.25 as a spot price. I'm setting a stop loss at R7.95. And that would imply then that the currency would have broken out the bottom of that triangle, and my whole analysis would be wrong in that case. The target is R9. So if we work out a risk to reward ratio, it's 1 to 2.5, which is decent in my mind. And if we just put up the red and green blocks that I often like to use to illustrate the point, that's what the red block there illustrates the risk, and the green block illustrates the potential reward in this case. And as you can see just by eyeballing it, that the reward is about 2.5 times bigger than the risk.
Which is sort of, you normally aim for 2.5, 3 times risk to reward ratio, so
yes,
potentially quite a juicy trade.
Yep.
Will you take us through the mechanics of it, because it is slightly more complex than I suppose your usual trade?
It is, and the reason it's slightly more complex is because I'm using a currency future here, and I need to just explain how this works. The currency futures have been around for quite a few years now, and it's one of the only ways for the retail investor to easily get involved in actually actively trading the currency. It's listed on YieldX, which is a division of the JSE. So in this case, the currency that I'm trading is the December contract, December 2012 rand-dollar futures contract. Each contract represents $1,000 of exposure. All right, so you need to factor that in when you're doing your risk calculations. In this case, I've gone short. Remember, I said at a spot price of R8.25, but because there's time value associated with the futures contract, you end up paying a little bit more for the future because we're now talking about 3 months worth of time value here, or 2.5 months worth of time value. So the futures price came out at R8.34 when I did this trade. My stop loss, I'm going to say, is R7.95, and I'm going to use the spot price here as my stop loss. Okay, just to keep that in mind, because there is obviously discrepancy between the futures price and the spot price. My stop loss here is based off of the spot price. The risk, therefore, is 30 cents per contract. All right, I'm risking 2% of our account as usual. So our account is sitting at about 380,000 rand now. So 2% of that is 7,600 rand. So as usual, I take the portfolio risk and I divide it by the risk per share, and that gives me how many, normally I'd say how many shares we can afford to buy, but in this case it's how many dollars we can afford to buy. So 7,600 divided by 30 cents gives us 25,333. So I'm going to round it off in this case to $25,000, and that because each contract represents $1,000, I therefore do 25 contracts for our portfolio, and that's the trade that I've done this week.
Is it slightly more expensive than trading a CFD or an equity?
Well, no, not really actually. Trading the currency futures is relatively inexpensive, and it's become a very efficient market. The spreads on the screen, the difference between the buyers and sellers has become very, very tight. So that you don't have an awful lot of slippage risk in the spread, and also the brokerage that your broker charges you, well, it will vary from place to place, but it's not massively expensive to trade the currency.
Okay, so fairly complex, but at the same time it's fairly simple too.
Yep. Yeah.
Okay, Garth, so that's one of the most recent trends. What does the portfolio look like given the action over the last couple of weeks?
It looks good. We're sitting at a new high on our portfolio now. We've got all the recent trades up there, so we've got the rand-dollar currency that we just spoke about. We've got our Naspers trade where we banked the 16,000 profit there. We're still sitting with the option structure, which I don't think is going to work for us this time around, but it's fine. It costs us nothing to hold that.
In fact, I think you almost got a bit of a premium.
Yeah, we will still account for a premium of around about 1,300 rand on that option structure, which I'll still add that in at a later stage. But I really don't think that option structure is going to work for us now, where the markets run too far away from those levels. But we've got it on, and as I say, there's no point in closing it right now. The Anglo Gold, we lost a bit. In Coronation, we took a profit. So all in all, we're sitting with almost 383,000 Rand in the account.
Fantastic. Very quickly, your upcoming course?
Yeah, 13th of October in Johannesburg is the next course. If you're interested and you'd like to attend, email me on garth@traderscorner.co.za and I will send you all the details.
Okay, great. Garth, we have to leave it there. Thanks as always for joining us.
Thanks.
That's Garth McKenzie, the founder and editor of Traders Corner.